Good afternoon, everybody. It is Tuesday, May the 10th, and it has been a continued rocky ride for investors pretty much across all markets, whether it's crypto markets, whether it's bond markets, whether it's equity markets. This has been a really, really tough start to the year. I think we're sitting here now, NASDAQ down about 25% or so far year to date, S&P 500 down about 18% year to date. Crypto markets, which we don't play in that sandbox, but down about 50% or so off their highs. Bond markets down 10-11%. So it's been a really, really tough start to the year, pretty much across all asset classes. The one bright spot has been energy and commodities, basically. That's been the only green, that's the only bit of green that you've seen in a sea of red so far this year. So a question that I'm getting is, are we done yet? Is this sell-off done yet? We had a really bad Friday and Monday. Today was kind of a mixed bag. And the answer, unfortunately, that I have to deliver is no, I don't think that we're done yet. I think we're obviously a lot closer than we were. But a couple metrics that we really want to look at. We want to look at volatility levels. They haven't spiked to quite the levels that we would expect to see during a major market bottom. Put-call ratios also not quite to the levels that we would expect to see at a major market bottom. And also looking at, number of stocks, percentage of stocks in the major indexes trading at 52-week lows. Also not where they would be if we're putting in a major bottom here. All really close, by the way, but not quite there yet. So unfortunately, I don't think the bleeding is done yet. That noted, we're close. We're getting pretty close. One positive thing you saw today is, particularly around the bond market, we've been in a 40-year downtrend in terms of bond yields, basically. And so looking at the 10-year Treasury, the top end of that 40-year declining channel was sitting about 3.2%. On the 10-year, basically the yield popped up there yesterday, sold off today. We got a little bit under 3%. And I think we need to really watch the bond market here, because I think what's happening in the stock market in terms of this sell-off, it's not going to slow down. It's not going to stabilize is probably a better word, but we're probably not going to get stabilization until we see the bond market stabilize itself, and hopefully even turn where bonds firm up a little bit. Maybe yields stay consistently on the 10-year down below that 3% level, because the stock market's really a discounting mechanism. So you're discounting future profitability of these companies, future earnings. And that discount rate really sits around the 10-year. It's a good metrics to look at that. And so we need the bond market to firm up. And then I think you'll see equities kind of catch a bid here. So the question is, in this environment where, unfortunately, I did a video, I guess, about 3 or 4 weeks ago saying, is the stock market sell-off over after we had a pretty good rally off those early March lows? And if you go back and listen to that, I said, I don't think it is. I think we've probably got to retest those lows, maybe even head a little bit lower. So why would you even buy any stocks here? Well, the answer is because consistently across the board, you get these sell-offs, they create great opportunities. If you wanted to buy stocks in December of 2021, you really want to buy them right now, where everything is basically on sale. It sounds like an overused adage, but it's very true. The stock market, the equity markets, the financial markets in general, it's really the only place in the world where people don't want to buy stuff that is on sale. And right now we're seeing a lot of great companies that are on sale. So the question is, who is buying stocks? Well, I'll tell you what, there's one pretty good investor who people may have heard of. We're talking about Warren Buffett here. And Berkshire Hathaway in the first quarter of 2022 went on an absolute buying binge. They bought in excess of $50 billion worth of stock in the first quarter of 2022, and they only sold about $10 billion. And they were buying names as diverse from being in the insurance business to technology names to energy. So it wasn't just one sector they were focused on. Berkshire was pretty active across the board buying stocks. And Buffett's a guy that in the past, can't argue with a man's success, and he has basically always said, you know what, it's time to be a little bit greedy when everyone is fearful. People are definitely fearful now, for sure, for a good reason, but this too will pass. But it's going to take the bond market to catch a bid. The bond market's going to need to stabilize first, and I don't know if all the pain is done yet in the equity markets, but I think we're really, really close. So if you stay with me now for 4.5 minutes, if my discussion today raised more questions than answers, please reach out to me. I'd love to have a one-on-one conversation with you. Or if you have anything you'd like me to address personally, or a question that you'd like to hear me try to answer, I'd be happy to give that a shot as well. In the meantime, thank you again, and until next time, hang in there, everybody.